So as I was saying, the direct why this outcome is very sad is because the directions of the trade is usually correct. However, the entry is not tight enough. What happens is that most of the time they actually they just jump in and they place a position which is very loose. And what happens is that the market retraces back, takes out your stop loss, and then continues onward exactly in the same direction that you had placed the market that you expect the market to go. So this causes of emotional stress. Some of them who are a bit more patient would want to get a better setup. The less patient ones, they will just jump in and get a bad setup. The more emotional ones, when they have gotten a bad setup and they have lost the trade, will immediately jump in again in the opposite direction, and that gets stopped out again, and then the story continues on. So how do we get a good trade setup? That's what I want to focus over here. Now let's look at a few things. First, we know that this is a downtrend. Okay, that's obvious. Let's look at something more specific. Now, candlestick patterns gives you lots of stories. It gives you lots of insights into the way the market works. And most technical traders would believe and they accept that all the price action is already showing in the charts, which is why they don't like fundamentals. That's a different story altogether. So when the price action actually is showing the candles, you can pretty much read of what the market's mentality is of the current price action. So let's look at this. We have had we've had, let's start again with bearish candles. We have had one, two, three, four, five, six, and this one is turning to be bearish. This one, seven. So let's look at just the closed ones for that matter. There's six bearish candles. Now watch this. Of every new candle that opened in succession after the first bearish candle, all of the opens, all of the opens have been lower than the close of the previous candle, except for the last one. If you could see over here, let's do this again. The open of the new candle has always been lower than the close of the previous, which is congruent with the overall downtrend, except for the last candle that opened over here and the new candle that opened over here, which is the current candle. So what is the two things that we could pick up? The trend was very strong and it was all moving along in alignment until this portion that we saw over here, until about a good 6 pips that we have, and that was well in the same direction. But at this point over here, we are seeing some dissension. Okay, the market has a bit of dissension over here. Now let's look at this even further. Let's look at another part of the candles that gives you some story. It's the shadows, the tails as they call it. So you could see there has been buying momentum upwards, but the buying momentum never actually stood through. Eventually, overall, the candles did close lower and the price continued downwards. Now look at this lower candle over here. Look at this lower candle lower shadow over here. Look at this lower shadow over here, and look at this lower shadow over here. As you can see, with each passing candle, we've had a longer and a longer shadow, right? So this was really short. This was relatively longer. This possibly would both be slightly about the same, but if I would zoom in and be a bit more precise, this would be slightly longer than this one. And the last one over here is a total giveaway. It's a complete retracement of almost more than half the entire body length. So this shows the market is retracing. But watch what happened after here. At this point, the candle opened higher, it went back up and continued downwards, right? So what we're trying to do over here is we're trying to wait for a retracement. When I say it's a retracement, that the market actually pulls back and then continues downwards. It pulls back and then it continues downwards. It pulls back and then it continues downwards. So this is what we're looking for. And again, in this current candle opening right now, we can see that there's a pullback. Okay, it actually opened at this point, it went up, buying momentum didn't stand through, it completely went down the other way, and then that didn't stand through it as well, and it has come back up at this point. Now if this stands the way it is, we might not have a valid trade setup. But from the way that I've seen this and from the way that the previous candles have followed, it could be a possible downtrend continuation. So what I have done is I've taken a trade right over here. I've taken a sell at this point in time where the price is 1.5011, and I've sold it here just after the retracement when just after the price action went up retracement, and it's come back down. So the price went downwards, but it didn't stand true, and it has come back to almost where the candle opened. Okay, that's the good thing. That's in line with what we're thinking. That's the downtrend. Yeah. So let's think about the opposite end. Is this downtrend over? Is it already exhausted? And honestly, I believe it could be exhausted as well. So let's look at this. We have had 6-7 candles in the same downtrend. Now you could look back in your charts, you could look back in any downtrend that you have. Is 6 to 7 candles in the same direction normal? Okay, that's a question you have to ask yourself. And the answer is no, it is not normal. In most price patterns, you will only see 3 to 5 candles heading forth in the same direction. Okay, if there's more than 5 candles and beyond, it is in a slightly overbought or oversold direction, oversold state, in whichever direction it is going. So right now we are in a oversold state, in my opinion. So there's two things that could happen. One is, of course, the trend could continue onwards, which is what we're hoping for with this sell order being placed, or it could completely exhaust itself out and then reverse completely, which is possibly what we are looking for here. So what is a good entry in this point, and what are we looking at? Now, if this would be a buy, you could place your stop loss over here and just wait for a reversal to shoot back up and then continue onwards. Now that's a very risky trade because you're taking the other side of the market. You're being a contrarian trader, which is not a bad thing, but it's a very risky trade. You have to wait for even more confirmation before you get in on that side. So going with the market right now, which is what I'm doing, I'm going in for a sell and continuing on the downtrend. So what would be my good gauge? What would be an area that I could look at, which is how I could protect myself? Now I could draw a fib over here, and I could just see based on the last downtrend that we have over here, where exactly what we were looking at. This has caused a new low in the market, and as you could always see, fibs gives you beautiful outlines of where the market can be having challenges. And true enough, when this retracement happened at the 23.6 fib level, the market was having trouble breaching this point, and it's come back down. Now, in my opinion, and what I'm going to do for the next hour or so, it's another 11 minutes before this candle closes. So I will watch for the next candle to open, and if the next candle opening would be higher than the current candle's close, then there's another warning sign for me that this might not work out, and I might choose to be a bit more conservative and might choose to get out. If the open of the candle, the new candle, is lower than this candle's close, then there's still hope for this particular move to shape out. And another important thing is note that I have placed my stop loss above the fib level that we are watching, and also note that it is above the psychological level of 20. So it's 150.20 and I'm placing it at 150.25. So now the market is challenging the psychological level of 150.00 as a very strong level, as you know. So let's see where that holds and how this shapes up, and I'll talk to you more about this and how it went in the next video. Bye for now.